So today I want to talk to you guys about a couple of tips I have for you if you're just getting into the realm of investing in stocks. And I know it sounds like a wonderful thing to do. It sounds so easy. You just buy stocks and they go up and you make all kinds of money. It's not true. I mean, it can be true, but you need to have a basic understanding of what you're doing. These are things that I wish I could go back in time and tell my former self about the stock market. That way I wouldn't have made these mistakes in the first place. So here's what happened. I kind of got into stock market trading just out of something I've always been interested in. I've wanted to trade stocks since I was like 8 years old. I can remember a trip to New York City where I saw the stock tickers for the first time, and I was just fascinated by them. I was like, this is something that I really want to learn how to do. I just love the idea behind the stock market. And then that day in New York City, I picked up a Wall Street Journal and I read it the whole way home on the bus ride that we took to New York City. That's where my interest in stocks started. And now the problem was, in order to invest, you need to have money, and I didn't have any money at the time. So it's kind of something that was on the back burner for me for a number of years. And then recently, when I started working and having money coming in and having extra money on the side, I decided to start investing in some individual stocks. And I'm the kind of person that likes to learn by doing, trial by fire. I've always been that kind of person. I don't like to just have the path carved out for me always. I kind of like to go through things myself and experience it firsthand. But for those of you who maybe don't want to waste a bunch of your money trading stocks and making bad trades and learning the hard way, I have 6 tips for you that I wish I could go back and tell myself, because I mean, I don't regret going through what I did with the stock market, because I learned a lot going through what I did. But for somebody who maybe doesn't have as thick of skin and as much ability to take loss as I do, I don't know if that sounds right, but if you're not looking to spend, because I'm not going to lie to you guys, I traded stocks for 9 straight months. Never made a profit on 9 months. I made bad trades. Now I'm to the point where I consistently make a few $100 a week trading stocks, spending 1 to 2 hours a week doing it. So I've gotten past that learning curve and gotten to the point where I'm making good trades and making a good amount of money with very little time. And then I just wanted to mention, before I get into the video here, the 6 tips, for the last 3 months I've been working on a trading guide or a strategy guide for stock market trading based on all the information that I've been studying over the last year or 2 on the stock market. I've read dozens of books and guides and talked to many people about trading stocks, and I kind of collected all of my favorite pieces of information into my stock market trading guide. And I think it's a great place to start if you're somebody looking to get into investing and you want to know what kind of signals am I looking for? How do I pick a stock? What stock should be on my watch list? I feel like it is a great foundation for you as far as stock trading goes. So if that's something you might be interested in, I will link it up in the description, and there also should be some kind of icon on the video in the corner. You can click on that and that will direct you to the page that tells you more about that if you're interested. But without further ado, I'm not even sure if that's the phrasing for that, but we're going to get into my 6 tips for stock market trading. Alright, my first tip for investing stocks as a beginner is get over your emotional attachment to money. I'm going to say this again because it's really, really important. Get over your emotional attachment to money. As you've grown up, you've become very emotionally attached to money. You love money. You want to make more money, and you want to hold it close to you, and you want to protect it, and you want to, minimize risks, and you want to be very safe, and you want to, you have emotional swings with your money. If you lose money, if you spend too much money, it's all driven by emotion, and that's really going to screw you up when it comes to trading stocks. Where I learned this, the book is Rich Dad, Poor Dad by Robert Kiyosaki. He sold 40 million copies of that book, so I'd be very surprised if this is the first time you've ever heard anybody mention that book. But if it is, I think I paid about $7 for it on Amazon, and it was life-changing, to say the least. I learned so much good stuff from that book, but this is like one of the #1 things I learned from that book as it pertains to stock market trading. Money is not real. You got to realize it's something that we collectively give value to. It's something that we make up to represent the value of something. We don't want to be carrying around bags of corn and blocks of gold and precious metal anymore, so we decided to have a universal value associated with items. Start thinking of money as that. Don't think of it as this emotional thing that you cherish and you love. It can't be that, or else you will be so afraid to lose money that you'll lose money once, or you'll get your emotions involved when trading, and it's not the place for your emotions. Trust me, your emotions are a very valuable tool in other areas of your life. But when it comes to the stock market, leave them at the door. They have no business in your trading strategy. You want to be trading based on technical data, the numbers in front of you, the charts in front of you, and nothing else. You don't want to be trading based on how you feel that day. Maybe you got a bad night's sleep. That you should not bring that into your trading strategy. That needs to stay in other areas of your life. Keep your emotions separate from your stock market trading. You can't be emotionally attached to your money, because the truth is, with stock market trading, you're going to win some and you're going to lose some. The idea is your wins will outweigh your losses. You're going to be winning more trades than you are losing trades, and that's how you're making profit over time. There's no way you can always be right, but if you're trading based on data and nothing else, you're going to have the best chances of being right, because you're not going to wake up one day and see that your stock fell, and all of a sudden you go, oh my God, I've lost $1,000, I better sell. You only lose that money if you sell. You only lose if you sell. It could go back up, all right? And if you have data in front of you that may show you that, oh, it may go back up. Oh, there's a good reason for this. Oh, it's just market or industry correction. You need to start trading based on data and not your emotions. Okay, my second tip for somebody as a beginning stock market trader is invest in something you actually care about. And I feel like this should be a no-brainer, but it's not, because I made this mistake too. This is kind of what my stock market strategy looked like when I first started trading. I'd wake up and I would open up Google News, and I'd be like scrolling through there, be like, oh, somebody said that this stock is going crazy, it's blowing up, it's got so much potential, let me buy it. I bought stock in a jewelry company, I bought stock in biomedical companies, I bought stock in oil. I mean, I don't have an emotional attachment to any of those things. I mean, I know I just said don't have an emotional attachment to your money, but it is okay to have an emotional attachment to the stock you're representing. You want to buy stock in something you actually care about. If you really like video games, find a video game company or anything involving video games, something that has to do with something you actually care about. For me, I'll give you my example. I live around Malta, and right in Malta there's a big chip fabrication plant, and they make chips for AMD. And I bought stock in AMD simply because I've seen what AMD, they're the main chip that company is making chips for over there in Malta. But I've seen what that has done to our local economy, and I'm so thankful for them for coming here. And so for me, I have an emotional attachment to that stock, because I'm like, you know, I'm really happy, I'm proud to represent that company with my money. And as a result, when you buy something that you're proud of, when you buy something you're actually interested in, when you buy something you care about, you'll be less likely to sell based on fear and panic. Now, I've told this story a lot because it's a very true story. I mean, it's not something it's just a really good example of this. I bought shares of AMD, and I bought them at a terrible time. I had no idea, but I bought shares, and the very next day the company unloaded a bunch of shares. They offered them to the public at a much lower valuation than the stock was currently valued on at the stock market. What they were doing was they were selling stocks in order to pay off high interest debt. So in the long run, it was a great move. In the short term, it decimated the stock. I mean, I saw the stock go from I bought the stock, I believe, $7.44 a share. It hit like just under $6 a share within 2 days. So as far as my trade goes, within 2 days, I was down over $1,000, okay? If I didn't care about that company, I would have sold. I guarantee you. I would have sold. I would have said, you know what, this was a stupid idea. Why did I buy this? I better sell before I lose more money. But because I cared about the company, I was like, you know what? I don't think this is the end. I don't think this is it. I'm going to hold and see what happens. And I ended up making over $1,000 on that stock, not even 2 months afterwards. So because I care about that company and I was proud to represent them with my money, I ended up not selling at the bottom. I was able to, you know, weather the storm, and I wasn't worrying about fear and panic. I had confidence in that company, and as a result, I held on to it and I sold it and I made a good profit not long afterwards. So that's something you guys really need to do when you're looking at stocks. Pick a stock in a company that you actually care about, or an industry that you actually have interest in. All right, I'm sure with this third tip, some of you out there are looking at me like I know, but a lot of people don't know this, and I had the same problem with this tip. The third tip: buy low, sell high. I'm going to say it again. Buy low, sell high. One more time. Buy low, sell high. I'm sure every person you've ever talked to about trading stocks has told you this piece of information, but nobody follows this rule, and I'm going to explain to you why. You need to be going against the grain with your trading. You don't want to be buying a stock when everybody else is piling into it. That is called the herd mentality. In my ebook, I talk about how there's three types of people who trade out there. There's people who make bearish investments. Those are people who are betting on the stock to go down, and they make money from falling stock prices. There's bullish investors who are betting on the stock to go up, and they make money from rising stock prices. For the most part, that's where the majority of people are trading. And then there are the sheep, and the sheep follow the herd, being led by other people because they don't have the confidence to make decisions themselves, and they get slaughtered by the market. The stock market is unforgiving. It's true. It really is. It can make you or it can break you. There is no forgiveness when it comes to trading stocks. So if you go online and you do what I did, where I was going online and watching what stock was way the hell up. It was flying. The sky's the limit with this stock. You got people on the news just talking about this stock left and right. Everyone's piling into it. I was like, I can't lose. I better get into this stock while it's up. Your mind tells you you want to get into a good thing, and we see a stock in decline almost as like a sick stock, and you can't look at it that way. You want to buy low. You want to buy that stock when everybody else is selling. You want to be seeing people on the news saying, get rid of this stock. I mean, within reason. If you see other reasons to buy that stock, it's not like you just want to go out there and buy a loser stock. You want to do your research and understand why the stock is going down in value. But you don't want to buy stocks that are sky high. They're going to come down. It's all hype. You don't want to buy stocks based on hype. You're going to end up losing a lot of money that way. I can't tell you how many stocks I bought based on what I saw on the news. I know one of them, like I said, I bought a jewelry company. I bought Signet Jewelers, and for some reason I read an article on like Seeking Alpha or one of those trading sites that was like, this stock has unlimited potential. Where we could see this stock trading 10% above where it's trading in the next 2 months. And I was like, of course it will. It's so high right now. My head was in the clouds with the stock. And unfortunately, reality set in. The stock went down and I lost money and I sold down. I bought high and I sold low. And everybody seems to understand this. If you ask them how to trade stocks, they will say, if you tell them buy low, sell high, they'll say, yeah, but give me a real piece of advice. And they don't follow this key rule. This is like the cardinal rule of trading. And I know every time I talk to people about stocks and I give them this piece of advice, they think I'm being an asshole. But I'm not. People don't understand this. This is the cardinal rule of trading. They think I'm mocking them like, oh, here's the tip, guys. Buy low, sell high. But it is the cardinal rule of trading. And you may think you understand it, but I didn't understand it. Even after reading book after book, I didn't get it. Until I really realized what I was doing. You do it without realizing it. You buy a hot stock in the news. You don't want to do that. It's as simple as that. Okay, tip number 4, quick and easy one. This is something, again, if you haven't guessed, these are all mistakes that I've made in the past, and I'm sharing these with you. So this is something I did over and over in the past. When I first started trading, I put like $500 in my trading account, and I was like, well, I don't want to spend it all in one place, so why don't I buy like a couple of different stocks? Diversification is not a bad idea, but when you invest so little, you have to overcome your commission before you can even make a profit, and in most cases, you're never going to, and let me explain to you why that is. If you don't realize this, just because this is a beginner's video, I want to explain this. When you go on any website, E-Trade, Scottrade, when you're going through a online stockbroker or any stockbroker, they're going to charge a commission for trading your stock. The prices vary based on websites or based on if you're using a live broker or whatever you're using, a human broker. But for me online, I trade with Scottrade, and it's like $7 a trade. Some of the sites are a little bit more, but Scottrade seems to be like the best bang for your buck as far as what I found. And just throwing this out there, I'm not paid by Scottrade. I wish I was, however I'm not. But I just like to tell people exactly how I do things because I like to be transparent. Even if I'm not getting paid for it, I want to be honest with you. So when I was trading with Scottrade, I bought a number of stocks in companies, or I bought a number of company stocks, spending about $100 on each trade. So here's the problem with that. Let's say you spend $100 in stock of the ABC company, which it doesn't exist, I just made that up. But you're going to pay $7 on Scottrade to buy that stock, all right? Then you're going to pay $7 to sell that stock. So yes, you pay commission every time you trade. A round trip is opening and closing a position. So every round trip you're going to pay $14 in commission. So that means that 14% is how much your stock would need to increase just to offset your commission costs. Let me say that one more time. 14% before you even make a profit. Let's not talk about slippage though. Or no, let's talk about slippage, because what is slippage? Slippage is the difference between the buy and the ask price for that stock. So just because the stock is trading at a certain value doesn't mean that you're going to get that exact price for it. Now when you trade a higher volume stock, there's less slippage because there's more trading going on. But you could possibly, if you're trading a lower volume stock, have a good amount of slippage, which means that maybe the stock is trading at $20.10 a share, but you only get $19.99 a share for it because that's what the current buy and ask prices are for the stock. So you won't necessarily get the quote of the stock at the time because of slippage. So your stock needs to increase 14% in value plus whatever slippage is involved before you even break even. So let's say you were trying to make $20 on this stock. You invested 100, you're hoping to get 120. That means that the stock would have to increase 14% to 114 before you even made any money. And then account for your slippage. You're talking about having that stock raise 30 or 40%, somewhere around there, before you even make any money on that. But that's the point when you're making your $20. But even if the stock increased 15%, which, ask anyone, that's a great stock. That's a great investment if you have a 15% return on investment. You haven't made a penny. You haven't even made back your money yet when it's increased 14%. And if it increased 14% and you sold because of slippage, you would probably still break even or end up slightly in the hole on that stock. That is why I suggest you do not invest any less than $1,000 on any given trade. If you don't have the money to invest $1,000, save your money and spend your time right now researching and learning more. I promise you guys, I know you're eager to get into the stock market, but it will not hesitate to kick you right in the gut and send you back to your chair, okay? It will teach you a lesson whether or not you want that lesson. I'm going to be honest with you guys. Okay, so my fifth tip for a beginning stock market trader is do not buy the news. This is something that I did like many times over and over, and it's something a lot of people do. You go on like NBC or any news channel and you watch like the money and the financing reports and the shows that are all about the stock market, and they talk about what the newest hot stock is. And I know earlier in this video we talked about the herd mentality, and when you run with the herd, you're trading like a sheep. What that means is you don't have the confidence to make your own investment decisions, so you'd rather have somebody else tell you what to do. And when somebody else is telling you what to do, it makes you feel like, okay, if I lose money, I can blame them. You need to hold yourself accountable for your trades, and one way of doing this is don't trade the news. There's a lot of people out there trading the news. A lot of people watch the news, and a lot of people trade the news. What you want to do instead is you want to buy the rumor, sell the news. So let's say, for example, there's articles out there saying, oh, okay, this company may be releasing a new product on this date. That's a rumor, okay? It's possible that it's just a rumor and it's not true, but on the chance that it's true, you may want to make a small investment in that. Then you find out, okay, it wasn't just a rumor, it was true, and then they release this new product, the stock goes flying sky high. That's the point when that stock becomes news. That's the point when all of the sheep are dogpiling into that stock and it's going way high. But you bought before people knew what was going on. You bought before it was mainstream. And as such, you paid a lower price for that stock. And now you're able to make a comfortable profit, sell while it's safe before that hype ends and the stock falls over. Because it's my second point here, guys. Hype is not a safe investment. I don't like to trade hype. Okay, so my final stock market trading tip for beginners is this. Check stocks a few times a day. I actually forgot what it was, so I had to turn around and look at that. So if you're wondering what that was, I completely forgot what my tip was, but now that I jogged my memory, let me elaborate on that for you guys. You don't want to check your stocks every minute of the day. I know it's exciting. It really is. That's the reason I trade. It's an adrenaline rush when all of a sudden you buy a stock and it's going sky high, and all of a sudden you're like, I actually made money trading a stock. Oh my God. But you don't want to just sell immediately because there's potential for more. And you don't want to be watching the stock so carefully that you get shaken out of the position too early. I've done this many times where all of a sudden I'll check my stock. Like, you know, the stock market opens at 9:30. I remember on one occasion it was like 10:15 in the morning. I log on and I'm like, holy crap, my stock is up. And I think I had like about $140 profit at that time. And I kept like hitting refresh like every 15 seconds and like, oh, it's up. Oh, crap, I lost money. Oh, look, we're up 2 cents now. Oh, no, we're down 3 cents. Oh, we're back up 4 cents. You can't watch a stock that carefully because it's going to be changing so minutely at that point that you need to look at what the trend is, maybe the 15-minute trend, the 30-minute trend of that stock. So what I do for myself now, because I made this a rule for myself after I made this mistake of getting shaken out of the position too early, and on that mistake, I mean, yes, I did make money on that stock. This was one of my early AMD trades, okay? I had like $180 profit, okay? I logged on and I saw, watching the chart minute to minute, that the stock fell like 3 minutes in a row, and I'm like, oh God, it must be doomed, it's going down. This is the most people are willing to pay for this stock. I better unload. And then the next day, had I sold, I would have made $1,300. But instead, I made $180 because I got shaken out of my position. So that's the lesson for you guys. Pick a time increment. No less than every 15 minutes, in my opinion. So if you're getting excited about your stock, let's say it's 10 o'clock in the morning, you check the opening numbers on the stock, and you see it's up. Say, okay, I'm going to close this at 10:15, I'll check again. At 10:30, I'll check again. 10:45, 11 o'clock, I'll check again. Do not leave stock charts continuously open on your phone or your computer. You will get shaken out of a position. And it may not be a bad thing because, look, you made some money, okay? Yes, that was a successful trade for me on AMD. I made like 180 bucks. But had I not gotten shaken out of my position, I may have made $1,000 on that early trade. And I've traded AMD a number of times, and I have done well with that stock. But I could have done a lot better had I not gotten shaken out of it because I was checking the stock too much. Like I said, guys, it's exciting. It should be exciting because once you are able to take this knowledge you have and apply it in the real world and be able to pull money out of thin air, it's amazing. It's a great feeling. It's a rush, and that's why I trade all the time. But you need to, keep your emotions in check and make sure that you're not playing it too safe, because for me, I left a lot of money on the table because I was watching my charts too closely. Okay, guys, that's pretty much all I got for you. These are my 6 tips for a beginning stock market trader, and these are things that, again, I wish I knew when I started, but I was able to learn them in the long run, and I went from trading 9 months in a row without a profit to making a couple $100 a week by trading 1 to 2 hours a week. It's not hard, guys. And if you watched this video all the way, I just wanted to thank you for spending the time you did with me, and I really hope I was able to shed some light on this topic for you guys. And if this information is something that interests you, I really think that my ebook might help you out as well, because it kind of expands upon a lot of this stuff, and I outline my exact trading strategy of how I am consistently making a couple $100 a week with very little effort trading stocks. But I thank you guys for watching, and I hope to see you in the next video.